8 things Warren Buffett says investors should do to get through a recession. Many signs point to a recession. According to forecasts from the Bloomberg Economics model, a recession is 100% likely to occur during the next 12 months. Fannie Mae forecasts that a mild recession will start in the first quarter of 2023. With that in mind, it's safe to assume that many Americans are considering what they can do to prepare for recession. Here are some tips offered by none other than Warren Buffett over the years. Look for opportunity during tough times. An investor's best friend is bad news. It allows you to purchase a portion of America's future at a reduced cost, he said in an editorial piece for the New York Times in 2008. Additionally, Buffett predicted that there will be gloomy economic skies and a brief gold rain in his 2016 annual shareholders letter. You should always keep in mind 2 things during such frightening times. First, as an investor, you should befriend broad fear since it produces cheap acquisitions. Second, your enemy is internal dread. Additionally, it won't be justified. Invest for the long term. He stated in the same letter from 2016 that investors who avoid excessive and needless fees and merely sit for a lengthy period of time with a portfolio of large, conservatively financed American corporations would almost likely do well. Buffett said in an opinion post for the New York Times that businesses will indeed experience earnings snags, as they always have. However, the majority of large corporations will break current profit records in 5, 10, and 20 years. It's difficult to predict whether, when, or how long a recession will endure, but if history is any guide, the economy always bounces back. Select index funds. During his first virtual shareholders meeting in 2020, he added, "In my opinion, owning the S&P 500 index fund is the best thing to do for the majority of people. People pay enormous sums of money for guidance they don't truly need. You would fare much better than purchasing Treasury securities if you bet on America and maintain that position for decades." The historical annualized average return for the S&P 500 since 1957 has been around 11.88%. Invest in productive assets. Wealth is produced in abundance by productive assets like farms, real land, and company ownership. In his 2021 annual shareholders letter, Warren Buffett stated that the majority of owners of such properties would be compensated. Diversify your investments. Buffett advised investors to have patience after making investments in profitable assets in that same letter from 2021, among other things. According to Buffett, all that is necessary is time, mental peace, broad diversification, and a reduction in transactions and fees. Invest in yourself. The finest thing you can do is to be very brilliant at something, Buffett declared during the Berkshire Hathaway annual shareholders meeting in 2022. In exchange for what you provide, people will give you a portion of what they generate. He is saying that, in contrast to money, abilities are immune to both inflation and recession. Anything you develop yourself is, by far, the best investment because it is completely tax-free, according to Buffett. The unexpected will happen. Prepare for it. Buffett stated that the most important lesson he took away from the epidemic in a 2021 interview with CNBC was just how unprepared we are for emergencies that are bound to occur. "I discovered that people are not as knowledgeable as they believe they are. The most important lesson, though, is that this pandemic is not at all the worst that might ever happen," according to Buffett. Society has a difficult time planning for things that are far off but nevertheless likely to happen and will eventually happen. Remember that recessions don't last forever. The recession is still ongoing. Buffett remarked in 2010 in reaction to the National Bureau of Economic Research's announcement that the recession ended in June 2009. "We're not going to be out of it for a while, but we will get out." Buffett said that for him, a recession ends when the real gross domestic product (GDP) per person reaches its pre-recession level.